Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me here today, we've got Steve, fresh off of his Christmas holiday break. How you going, mate?
Good afternoon, Ollie. I'm a bit under the weather, to be honest, but I couldn't abandon you on the first Monday Open for the year.
Didn't
Otherwise
do
you'll
me
just go
down just
wild.
yet.
But Happy New Year to everyone. Happy 2026. Wishing
Yep.
everyone all the good luck when it comes to trading.
Oh, well, yeah, Happy New Year to everybody as well. Keen to get in touch with all of you that we can over the course of the year. So let's move into the video ahead. So for any of our returning viewers, this will all look very familiar. But for any of our new faces here, this is how we normally run it. So starting out, we'll take a look at the big events from last trading week, have a look and see how this moved prices. We'll then move into the this week section where we'll put a spotlight on some of the major events for the week coming up, see how this fits in with our key themes from the prior week, and give our take on where we think prices will go. We'll then move into the technical corner. We'll put a spotlight on a couple different markets using a top-down analysis and our technical indicators. And lastly, we'll move into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. So starting out the last week section, on your screen you will see your guys' top traded products for the prior trading week. Probably to the surprise of nobody, we've got gold and silver sitting in there. I don't think they've actually had a week out of the top 10. But how about you, Steve? Any surprises?
Definitely no surprises. So especially when gold's hit all-time high. So it's just touched 4,600 USD, and silver's also just almost touched 84 USD. So this is just one of those. I don't know what you can call these markets, but as a trader, volatility is always your friend. So but let's get on to last week, and we've got a lot of data to actually cover from not only last week, but also recapping over the sort of break. Last week, we did see the Australian CPI data come in lower than expected, which is good when it comes to a potential hold. So we did have quite a few economists thinking that there could be an interest rate rise by the RBA as early as February, which is planned for the 3rd of February at 2:30 p.m. The likeliness we do now have a hold, potentially it's basically 75% when it comes to the ASIC rate tracker. A lot of people are predicting probably a higher CPI. We still do have one more data point before that. So on the 28th of January, we do have our 11:30 a.m. the December CPI. So that could change the odds, but right now we're sitting at a fairly good sort of level that if inflation's down, there's a bit of relief when it comes to mortgage holders. So thankfully, I can actually eat a bit more, and it's not eating into my mortgage. But we've also got the China data. So the China data, the CPI actually came in. It's actually a 3-year high in December. So previously it was 0.7. But the good thing is the actual China PPI data actually shrank, which is actually the 39th consecutive month of contraction, according to investing.com. But a lot of the actual headlines last week, especially with the data, was really on the Friday. So on the Friday, we saw poor US ADP non-farm or private payrolls. We also saw the non-farm payrolls, which is more the public sector. We also saw that come in, lower than expected. We saw the unemployment rate 4.4%, which is better than expected, but also the initial jobless claims better than expected. But overall, those sort of data, especially considering their sort of population, it was very concerning to see. And we saw basically an instant rise, especially in gold and silver. And I think that's really continued over from that sort of Friday over to, and that's why we're seeing these sort of all-time highs. So we're seeing a lot of movement, a lot of potential issues when it comes to the US, when it comes to employment. So yeah, it's interesting to see with the volatility. We'll go on to the next slide. So just because we've been off for quite a few weeks, we do have a lot of other sort of events that have come across. I won't go through everything, but the key notable event that everyone's probably heard is around basically Trump capturing Maduro, which is basically the Venezuela president. So on the 3rd of January, basically there was a swift mission. Basically, he invaded and then captured Maduro just before he was actually getting into his. He actually had an underground vault that he was trying to close the door, but he was captured by the US. There were casualties in Venezuela, but there were no casualties when it comes to US troops. But what this actually meant was a lot of unrest around the legalities. What Trump has said is that in regards to sort of the drugs, so the fentanyl supply as well as other sort of illegal drugs. But the actual play, there's a lot of conspiracies out there. So I don't want to add to conspiracies. I just want to give my personal general perspective, what I think it is. So don't take this as a grain of salt. It's just a sort of perspective. I believe with this, it really firms up the midterms. So it helps Trump's chances when it comes to the midterms. I think it's almost guaranteed personally. And also, it's a long-term sort of oil play. So what actually with Venezuela, they actually have the most oil within the world, so bigger than Saudi Arabia. And what we've seen is that the infrastructure of Venezuela, they don't actually have a great infrastructure to develop oil to their sort of capacity compared to Saudi Arabia. So the plan is that Trump will probably go in with the US companies, so the big sort of US companies, in order to build that sort of infrastructure and then eventually get oil, which would make it cheaper for the US consumer, where we've previously said that 70% drive. So obviously that's going to be very important to get those sort of prices down. So that is one opinion. It is a general opinion. That's what I've read, and there's a lot of things online. So don't try not to get sucked up into it or the sort of different sort of conspiracies or headlines. But yeah, that's why I wanted to really take on that. We'll go on to also this week. So this week we do have again, Ollie, your favorite,
Get me
Japan
over to Japan,
holiday.
honestly.
I know it. I mean, yeah, I'm sure you'd be loving Japan. But yeah, another public holiday. I think last year we had at least six. This is the first, and it's what, second week into
Yeah, I was gonna say, they
twenty-twenty-six.
don't waste a lot of time over there.
But yeah, I guess the biggest sort of news that's going to come out this week is around the US inflation. So we've seen the employment. There are concerns about the employment. At least unemployment rate is lower than expected, but those sort of job numbers. So the inflation, obviously, the Fed Powell, so Fed Jerome Powell has actually said the dual mandate about getting basically inflation in control, as well as also having stable employment. So this is really going to count for a lot. There's going to be the retail sales, so we'll see how the retail sales, so see, especially during that sort of December period, how people were actually spending during that time. But there's also two different major headlines. There's a Supreme Court decision on tariffs. So last Friday we were supposed to get potentially a outcome, but now we're looking at Wednesday, the 14th. So basically, going to be probably Thursday our time in Australia. But essentially, whether the tariffs are actually legitimate or whether they need to be reversed and unwound. So if it is unwound, I know that previously Trump has said that they'll become a third world country. There's a lot of revenue that's come in for tariffs. If they were to put it back, it will be basically giving it back to the companies, and then however they deal with that, it's going to be probably
It's gonna spiral the already out of control debt.
yes,
Like they're gonna have to do something, right?
yeah.
I mean,
Um,
to be fair, keep an eye on the safe haven assets. If that happens, I'll be very
yeah.
curious.
Yeah, it's going to be one of those events. But breaking news today is that the DOJ, so Department of Justice, has actually opened criminal investigations into Fed Chair Jerome Powell. This is in regards to interest rates, it's still coming to light, but I mean, this is actually a real major one, because it's really talking into the credibility and um, the Fed independence. So whether we already know that there is a decision anytime soon, within maybe the next week or two, that Trump is going to elect the next Fed the Fed chair, which is going to be taking place after Jerome's tenure, which is May this year, so May 2026. Most likely, the leading candidate is Kevin Hassett, but the other one is another Kevin. Um, the yeah, so
Whoever's
it's
going to
most
cut the
likely,
rates the
yeah.
furthest. I think that's the answer to that one. Whoever he's going to nominate.
Yeah, so we're going to see some probably volatility, and this sort of criminal investigation really is going to open those can of worms when it comes to independence. So we're really looking onto that and seeing how that's going to play out when it comes to the market volatility. So we'll see a lot of price action. Obviously, be conscious, be aware that these headlines are just come out, they're fresh. So that's why we're seeing a lot of movement at the moment.
Unreal. Okay, so I think it's a good time for me to jump into the technicals. So let me share my screen with everybody just for the moment. Nicely segued from the upcoming part for this week about the Supreme Court decision. Talk about the safe haven asset. So I thought let's look at the most traded safe haven asset from 2025. So we're looking at gold. Starting out looking at gold against the US dollar on the weekly. So been very well publicized. We've been in a very strong uptrend over the course of 2025. Particularly, we did go ranging between April to late August, and then since they've been on a pretty strong uptrend. The bullish momentum also very much signaled by our moving averages, which are all fanned out, evenly spaced, pointed in the right direction. Although I am quite conscious that the prices right now are quite overextended past their 20-week moving average. It's also supported by our RSI, which has hovered into the overbought area, which historically will be met with somewhat of a pullback on price. That being said, we are in a strong upward trend. So I'm looking for a signal either side to see where we're going to sit for the week and then long term for a potential trade. So moving this now into the daily chart for gold on the US dollar. So you can see here highlighted, we've got a pretty strong ascending channel, which the prices have been very respectful of since its first pullback and then respective bounce off support from late October. Been hovering around the middle part of that range, which I do find quite interesting. And then when we did reach into the upper part of the channel, did see a strong sell off. Personally, I do think that was a lot of profit taking ahead of the closure of the US tax year. But For where we're sitting now, I'm seeing on the MACD, we did see a crossover. This was on Thursday last week, which historically will indicate a change of momentum. That being when we had a drop down on the price and a bit of a consolidation here. Once we did see the cross, we have seen a bit of a takeoff to start the week. So for this one, I want to see these continue to fan out. I want to see a bit more divergence in the MACD as well as on the RSI. When it comes to the RSI, though, I'm conscious that it is getting very close to the overbought sort of area above 70. When you can see it for yourself, historically, when that has happened, it's been met with a pretty sharp pullback on price. So I think for the trading week here, we could see the price move towards the upper part of the channel. But personally, I'm expecting a bit of a pullback on price. Overall or holistically, I am a buyer in this market, so I'm going to be looking for opportunities to buy the dips. And so, say for example, if we do see a price pullback here, we could see it trade into the lower part of this channel, could see it trade into the moving averages. If we do see it find support, I would expect prices to then go and then maybe retest price swing highs. But for this, I do have to be conscious though that when buying all-time highs, you do have to be conscious that there is a good chance for a pullback on there. So if I'm looking for a buying opportunity, I'm looking to buy the dips, and I'll be looking to manage my risk just below the dip on there. So if it does go against, at least I've got that covered. Likewise, if I'm a seller in this market, I'm expecting a pretty sizable pullback. I'll be looking first of all for a sequence of lower highs alongside lower lows, and I'll be looking for an entry around one of those on the swing high for it to go further, with my risk management just above that swing high as well. So the next market I did want to look at, we've got the pound against the Australian dollar. I'll shift this one back into the weekly as well to see where we're looking at. So for where we're sitting on the weekly, dating back since late March, or sorry, early April, we've been in a pretty strong downtrend. You can see this is also supported by a sequence of lower highs alongside lower lows. We're also seeing our 20-week moving average cross over the 50-week, and it looks like it's on a pretty strong course to meet it with the 100-week moving average, which historically will act as a signal of bearish momentum. I'm also seeing here on the MACD, we're seeing that the MACD is below its respective signal line with a bit of divergence in the price there, which is telling me there is some bearish momentum still going, and it's further supported by the RSI. So I'm not sure what happened with my screen just then. So let's move into the daily chart now to see where we're sitting on price at the moment. Reason why I did think this was quite an interesting market to talk about, that we're currently sitting just above a very respected support level at the £2, or sorry, $2 Aussie. So right now we are sitting at this price. If you look prior to this action as well, we can see that prices had been very much respecting the $2.04 before making a breakdown below there, finding support at $2, coming up, finding resistance at its prior support, and then going on to retest that swing low, which historically will be an indication of bearish momentum. Also seeing some crossover and some divergence in the moving averages, all facing down, which supports our argument for bearish momentum, further supported as well by our MACD, which we are starting to see divergence on as well. Now, if I am a seller in this market, I am personally a seller, and so I'm looking for selling opportunities. I think for where we're sitting now, I think if we can see a break and a hold below the psychologically significant $2 price point, I think we could then see a price move further down to the next psychologically significant levels. I would expect it to try and test 1.98. And then if we see it go lower, it could go towards the 1.96, or where it could also range there as well, as it had done a little bit previously. Similarly, if we do have a green day as well. Sorry, I'm not sure what's just happened on there. So similarly, if we do have another green day today as well, I would expect we could see it come up to those moving averages. If we see it find resistance at the moving averages, we'd then be looking for an entry to challenge towards this level down here. Similarly, if we do see it move higher up, break its most recent swing high, we could see it then come up to retest its prior resistance. Okay, so that brings us to the end of the technicals. Now moving into the Q&A section, where Steve and I will answer some of your guys' most commonly asked questions from last week. All right, Steve, would you like to take it away with question one?
Yeah, I'll take it. take question one. So, what should I look ahead out? Well, what should I look out for ahead of the Supreme Court tariff ruling? So, yeah, the tariff ruling should be this week. Obviously, the outcome from what the sort of reports are is that most likely the decision is that it's not by the sort of constitution. So there's a good chance that it will be overturned. What that means currently at the moment is we're looking at about $133 billion worth of tariff revenue that's already been received at the moment. So if that is the case, and if that is reversed, that has to be given back to the businesses. So all the businesses that have received it. As to most of those businesses, they've basically, because of the uncertainty around the tariffs, they haven't actually given it to the consumer. But if hypothetically they gave it to the consumer, then they'll have to think about other sort of ways. So it does get pretty tricky. But the hardest thing is that the debt level. So we already know that the US is over 40 trillion when it comes to their sort of debt levels. So adding more to the debt levels, the unstability of the actual US dollar, it's going to definitely have the mark in a spin. And I'm not sure what's going to happen, to be honest. I don't think anyone can predict at the moment. So we'll have to wait and see.
Could see them turn on the printers and see some dollars come
Yep,
out.
definitely.
All right, so I'll take for question two. Go. Why are copper and platinum hitting all-time highs? So as we know, gold and silver have been very well documented about hitting all-time highs, but floating somewhat under the radar, we had copper and platinum. And the reason for this is reason why these are hitting all-time highs is due to a large increase in demand, particularly coming from the green energy transition for electric vehicles, renewables, and AI infrastructure. Particularly in the AI space, copper and platinum are needed for wiring in data centers, which has led to sizable gains in prices as the AI boom swept financial markets. More recently, we've also been seeing a somewhat of a supply squeeze as underinvestment in the mines and lower quality overall has led to higher prices on the existing supply. Lastly, as well, which I did find quite interesting, is that investor flows have been coming in very sizably as a result of a wider precious metals rally, particularly in the gold and silver, and has attracted a lot of speculative trading in these markets. Okay, so that brings us to the end of the video today. Recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting a link to this in our VIP chat room as well as on Telegram. For anyone who's looking to get involved in the Monday Open, send us through any questions. Please feel free to reach out to us on the VIP chat room or feel free to reach out to your relationship manager directly. And that's everything from me today. Thank you, everyone, for watching. Happy 2026 to you. And thank you, Steve. We'll see you later.
Thank you, Ollie. Enjoy evening, everyone.